All right, hey there, everybody. Welcome back. I'm Chris Franks with Texas West Capital. It's just after 11 a.m. Central Standard Time here on Tuesday, the 1st of June, 2021. In beautiful Boerne, Texas, just up the road from San Antonio. You know, Texas has had its share of rain here the last few months, which is definitely a good thing. You know, we could use the water. We've been in a drought for so long, but that severe weather that comes with it, man, we can definitely do without that. So hopefully y'all are doing all right. Hopefully you can hear me all right here. Yeah, so, you know, my brother-in-law passed away on Friday. So, yeah, so we kind of are with all that. Just got to get all that legal stuff taken care of now, you know, that happens when somebody passes and dealing with everything. So that's it, but I'm here to get back to work and hopefully give you guys some actionable information, some understanding of the way the markets work, stuff like that. So you're not out here getting chopped up. You're going to get chopped up. You're not going to listen to everything I say. There's no doubt in my mind. We're human beings, you know. We tend to kind of do what we want to do, regardless of what somebody else says. We got to learn the hard way a lot of times. I'm just hoping that that I can soften some of that hard way. Again, you're not going to listen to everything. You're going to do some things and have to learn yourself. But hopefully you'll listen on some things, and that way it won't be, as painful as it's been for myself when I first learned how to trade, or what most people go through. So, yeah, let me see if you guys, who's here already? Mark, what's up, buddy? Yeah, coming on in, man. Glad to have you in, bud. Hey there, Hank. Thank you, sir. I appreciate that. Cue the action. What's going on? Thomas here as well, Spiral Architect. Thomas Payne checking in from Dallas, the other side of the state. I say that kind of tongue-in-cheek because, you start on one side of the state and a day later you're still in the state. It's hard for most people to comprehend just how big Texas is, unless they're from Australia or even Alaska. But I don't know, even in Alaska, you're not driving across the state, so there's that. I don't know, maybe Adam will correct me on that. I don't think anybody's really driving across the state too often, like we are here. Nevlusian, what's going on? Patricio is here. Crypto Mowgli, hello, sir. I'm doing all right, man. I appreciate you. Thank you, sir. Thomas wants to know, what are my thoughts on the $6 trillion budget being passed? This sounds like absolute insanity, but perhaps you understand the fiscal rationale. Yeah, I mean, it's just the idea that there's with the government that we've got in there now, the people that are running it. There's this idea that government can step in there and do all these things, make life less hazardous. You guys, you have to remember, just being born is never guaranteed. From the moment you are, you're conceived, you're actually dying. I mean, we're growing, but we're dying, right? We're getting closer to our day of death. And, a lot of people throughout the world have gotten to this belief that they are guaranteed some sort of health care or some sort of living circumstance or some sort of whatever. And at the end of the day, guys, people are going to argue about that left and right. At the end of the day, there's finite supply. This is basic economics, finite supply. And as long as the populace continues to grow, you're going to have more battle over that supply. Now, fortunately, technology comes in, and there's been a lot of a decent bit of philosophical text written on the idea of technology, kind of increasing what we do day in and day out, increasing our ability to do more and helping us out and whatnot, because it decreases what's used or what's used in a different way. But at the end of the day, the government comes in and they say, okay, well, we're going to do this, this, and that. And we need money to do that. So they're going to pass these big stimulus stuff and fiscal bills and whatnot, so that they can do that. And part of that is so that they can go back to you and go, well, guess what? You guys are now, without actually saying it, without actually saying that you owe the government. They're saying you owe the government. They're saying, hey, look, we're doing all this for you, so you owe us. And what do you owe them? You owe them your non-questioning acceptance of whatever they do. But as we all know, anybody going into government, government government's all corrupt, guys. Not that government itself is corrupt. It's a mechanism for corruption. And, and we've seen it all throughout history. And those who gain power tend to abuse that power. The people who are interested in being in charge are the ones that should not be in charge, because they're the ones that are hell-bent on using that power. Whether they truly believe, that what they look at how the world should be or whatever is correct or not, it doesn't matter. They're going to use the power, and they're going to use it to its utmost limits. And so you get government in there, and then they start spending money, and the other side of that is in order for the government to remain relevant, it has to have the populace believing that it's relevant. As soon as the populace, as soon as the society there says, we don't, you're not the government, period. As soon as society says that, government has no more control, has no more power over them. So government, spends money in a way that it makes people feel like they owe the government, like the government's doing for them, even if it's for things that really the government can't do. So that's where that is. Is it a lot of money? Yeah, it's a lot of money. Is it a lot of money? But it's always relative, guys. It's always relative. But here's the other thing: it's not just how much money is printed and how much money is spent. It's where does the money go? Who gets that money? How is it spent? Is it spent? Where does the money go? These are all important things that lead into whether all that extra money actually is in the long run, significantly inflationary or not. As long as the money makes its way out into the public and it gets used, via bank loans and whatever, that's going to be the inflation that you guys are always, concerned about and talking about. But every time money goes back into the bank, that's a disinflationary or deflationary event. You're taking dollars out of the system. So that's kind of what that is. I don't look at it and go, oh my God, 6 trillion. Oh, we're, that's the death of us kind of thing, because you could have done the same thing back in, 2009, 2010, with first QE that came out when they were doing it and how everything went, exploded at that point. And you say, oh, but this is so much more. Yeah, but at the time, that 2010 and 2011 was so much more than previous as well. So everything's relative. So, yeah, that's kind of where we are with all that. And we'll see how much they actually spend and how much actually gets out there and where it's all done. But, government will spend itself into oblivion. Governments don't tend to last. I think they last on average something like 200 or 245 years, something like that. We're what, 300 years into this democracy experiment. But governments don't tend to last. They tend to be overthrown and or just replaced by something else. It is what it is. We just got to learn how to work it while we're in it so that we can, hopefully be sheltered enough from it when that happens, right? Let's see here. Claudio, what's going on, man? Good to see you. Ari's here. Budman, what's going on? He says, I don't know. I've been buying those 32K and up to 34,000 levels. Yeah, we'll talk about that in a minute here. There's a couple of possibilities for Bitcoin. Hey there, Data. Good to see you, man. BlockTech's here. Bianca's here. Thank you. I appreciate you. Brian, what's going on, buddy? Biamaj, good to see you here as well. Mark is here. Let's see here. Andean. Hey, I appreciate you, man. Thank you, guys. I really appreciate you guys. One thing, I always talk about how TWC really is all about the people there more than anything else. I really believe that because, trading can be a very lonely thing because it's only you. It's up to you. And as much as people want to blame everybody else, at the end of the day, you are the one pulling the trigger, period. That is, I mean, that's really where it's at, guys. I've been talking about this for years. You know, and people still want to go out there and they still want to just, if somebody says something, they just want to go ahead and buy immediately without understanding what they're doing or what the risk may be involved in whatever. And then, you know, when something happens, they want to, you know, come back and complain. You know, guys, at the end of the day, you're adults, period. You're adults. You are responsible for your actions. You know, if somebody nefariously does something, you know, I mean, that's on them, but it's still on you for, especially in the market, just blindly trading whatever they're saying. And we get this all the time. That's why, you know, we lean so hard toward education at TWC, so that way you guys can learn to, at least when you're looking, you know, when somebody says, here's what they're looking at, you can go and go, well, does that really make sense? Or what about this? Or how should I play that with proper risk management so I'm not blown out of the water with it? I mean, I continue to look through these groups. A lot of them are on Facebook and whatnot. These trading groups, and just the things, people are like, listen, I got $500. What should I put it in? Are you kidding me? If you don't know, you don't ask some strangers on the internet. No, but what? I can't even fathom the type of irresponsibility that is. You know, or hey, here's my portfolio. What do you guys think? Rate it. What do you mean? What is rated? What kind of experience do they have? What kind of qualifications do they have? Why do you care? But it's because people get involved and then they don't know what they're doing and they're scared. And so hopefully we try to take away a lot of that fear as much as possible in helping you understand how markets work and whatnot. So if you want to join us, you can do so here at howtotradetowin.com. We'd absolutely love to have you there. Tier 3 is where it's at, as I always say. We got so much there, including, you know, well over 80 hours of educational video content. We've got 2 weekly live streams, one dedicated to Elliott Wave and one dedicated to tips, tricks, and techniques to get you trading right away. And soon we're going to have a 3rd weekly stream with Wyckoff, dedicated to Wyckoff analysis. And so, I mean, you know, the only way, honestly, guys, with as much as I do, as much as I bend over backwards here, the only way that you're not going to learn something is if you're not trying to learn, seriously. I think you can be passive and learn something, learn quite a bit with what we do. If you're active, you're going to learn a lot more. But there's no way that you're going to buy a membership with us and not learn about trading unless you're proactively trying not to learn. And I think even with that, you might still cause yourself to learn something. So join us here. We'd love to have you there, guys. It's a great place to be. Hey there, Tell You Rider. Good to see you. Nathan Elliott, what's up, man? He says, printer go burr. Fix the money and fix the world, I guess. If only there was something out there that nobody could own and print more of to steal from the masses. Yeah, I think, you know, again, guys, you know, Bitcoin, and you know, especially if you're newer and you haven't done a lot of thought about it, you might take a lot of offense to what I'm about to say. But I don't think this Bitcoin is this great savior for us. I don't. You know, my theory, my hypothesis, is that it was created by an alphabet agency here in the U.S. As a way to transition out of physical fiat to electronic payments. We've already been dealing in electronic money for a while, you know, credit cards and debit cards and all this kind of stuff. And this is just that next evolutionary step in that. But it in no way is going to save us from government or centralized power or from the elites or whatever you guys want to, you know, call whatever's there. I think it was created to do that, to get us, to continue, to get us deeper into the system. I mean, if you think about it, electronic payments are easy to track. It's hard. If I walk up to you, I give you a $5 bill. It's almost impossible to track that. You go give it to somebody else, you give it to somebody else. I mean, it's almost impossible to track that exact $5 bill. But if we go and transact online through some kind of blockchain or something, it's easily tracked, easily. And then people say, oh, but Monero, or, yeah, you know what? The one thing you should know is if there's any kind of cipher or, you know, some kind of cryptologic thing going on, it's going to get cracked at some point. You know, again, Tor was developed. If you think about it, Tor was developed by the military, right? So Tor was developed by the military, and then it gets, used by the masses. And then, Cambridge University, graduate students over there, the FBI contacts them and gets them to break the Tor. And so now Tor is no longer anonymous. The FBI knows, can track you on there now. They did it for a pedophile ring, a worldwide pedophile ring that was going on. So, I mean, it's hard to say that's terrible that happened. It's a good thing to get rid of that kind of stuff, but nonetheless, it's not this bastion of security, that it once was, or once was thought to be, anonymity and whatnot. And blockchain's the same way, guys. It's easy to track you electronically. It's difficult to track you physically. So, everybody wants to believe that, that Bitcoin is this great thing that's going to save them from the rich and the powerful and all this. And I think it's just a tool they're going to use to continue on. It's something I've been talking about for a few years now. So I've got a lot deeper thoughts in that. I'm not ready to put it all out there at the moment, but yeah. So, that doesn't mean you can't make money along the way, but I think it makes it important that you that if you understand that, at least you're not looking at, at a different end result. Path, the path can go that way or that way, right? And if you're thinking it's going to go that way and it's this, great saver of humanity and whatnot, and then it goes this way, it can really screw you up. But if it's likely to go this way rather than this way, what everybody's thinking, then at least you can use it to your advantage. And that's all it is. That's what life's about, man. It's about taking the information and figuring out what it is and what's going out there so that you can use it to your advantage. And it's the same thing that we look at the charts there, right? So it's all about understanding how markets work, how people think and work and operate, and how that, translates into market movement, and then using that to, to hopefully increase your wealth and position. Because I keep telling you guys, man, at the end of the day, in a world where money is what makes things happen, money is freedom. Your government is not freedom. There's a lot of false senses of security and freedom and whatnot, provided by government. But having that money means that even if your government tells you you can't go anywhere, you have to stay right where you're at, you can still go. Having money means somebody somewhere is going to be an enterprising individual and help you get out of there for a price. It helps you move. If you're living in an area where things turn down and things get worse and worse, and you decide, you're tired of that nonsense, you want to move somewhere a little bit less choking, you can do that. A lot of people moving from California to Texas for those kinds of reasons. I mean, they both got governments, yeah, but, again, California's government is very, very restricting, and it continues to add more. It makes life difficult. But if you have money to move, you can move to Texas. And Texas, we still have a government. We still have things we have to do or whatever, but it's not as difficult as it is in California, or as expensive because of all the regulations, everything put in. So, again, money, as I've told you guys for years now, money is freedom, which is why I think trading is such an invaluable skill. Unfortunately, most people come into trading and they're looking to just get by with the quick, easy pick. They want to make, 10,000% overnight, basically. And a couple of people do it. And the sad thing is, because those couple of people do it, that's all the new people hang on to. They don't look at how many other people didn't do it and how many other people lost money. They look at those couple of examples where somebody got lucky and made that money, a big bit of money. And they went from, 5,000 to 2 million. But those stories, guys, like that, especially when they're done quickly, within months or whatever, I mean, those are exceptions to the rule. Those are not the reason you do a thing. But it is the reason that most people use to do that thing, which is why they end up losing money. So, yeah. Hey there, Joe Ryan. Good to see you, man. Niels, what's up, man? Leighton checking in from sunny London. He says, today, Aramis, good to see you. MK46, man. Everybody showing up today. TV Canal, what's up, man? Antonio, listening from South Carolina, ready to pull the trigger. Which way are you going to pull that trigger, Antonio? Hey there, Onyx King. Thank you, buddy. I appreciate you. Let me see. I appreciate that, Tell You Rider. Let's see here. Oh, Antonio, okay. You said you sold a whole Bitcoin at 37K, hoping to buy it back at 20K. I don't know. Maybe it'll go to 20, but we've got some targets here. So if we look at this, remember the one thing I've talked about, through all this, is that remember we had this 1618 extension here. Remember that? If we come down here, we measure the first wave down. And we measure it back up there. And then we hit the 1618 area right here, right? And remember, that's usually a wave 3. And I said, well, sell off. Bitcoin does it. It is possible this could be, wave C in the end of it. And we've got to count with 5 down. But I said, until we're breaking out above these levels up here, this 46,000 kind of level and whatnot, getting above there, that it could be a wave 4, right? So we've got to kind of get above this interior wave 4 and this exterior wave 4. Until we get at least above the interior wave 4, then this could still be a 4 here. I would have to look at how that count is. Would this be 1, 2, 3, 4, 5? I mean, that would seem to make the most sense. Because again, this hit the 1618 right here, right? And so then you have this possible triangle going on here. See if I've got those lines in there. Yeah. And we'll talk here in a minute what you need to look at here. There's only a couple places, guys. At this point, there's only a couple of levels you actually need to watch to know whether we're going up or down, okay? So I'm going to show you those here as I get this kind of set here so we can see this on the different time frames. And then right here as well. All right. And so let's jump on over here to the 4 hour. And so as you can see here on the 4 hour, this red count, potentially, ABC up, ABC down, ABC up, ABC down, ABC up. So wave E could potentially be done right here at this swing high. Now it doesn't have to be, but it could be. Wave E has to complete prior to wave C up here, prior to 40,893.60. If from this point here, if we go up and we go above wave C here, again, that's on Kraken here, that's $40,893.60. If we go up above that, then this is not a triangle, okay? That invalidates the triangle. However, let's say we go from here and we drop on down through wave D here. Now, this is possible, wave D. It's also possible that maybe this is an A, B, and a C for wave D, But dropping below what we believe may be wave D here at 33,423.20, that's going to be your first clue that the triangle may be what's in play. Dropping below wave B here, this one, this swing low, at $31,078.70, that will confirm the pattern. And at that point, we have a pattern target of $12,738.40 below where wave E terminated. So, if this is wave E right here, this basically gives us a target right down here of about 25,200 or so, 25,000, right around that area. That's this S3 pivot just below it here on the 4 hour and the 1 hour. But it's also on the daily here. It's that daily S1 pivot right there around 24,877. So looking at this right here, we're moving it sideways between the pivot and the S1. It would not be surprising at all to see price come down here to the S1 and then bounce from there and head up. If we break out above the pivot, we should be good to go higher. So if you want to look at this from the daily, what you're looking at is a breakout above the pivot. That daily pivot there at about 42,300 or so is a good sign that the bottom's probably in your heading up. But if you're coming down, breaking below these swing lows, that gives you a target down here of this S1. And like I said, right around 25,000, just right above it, that area there. Now, again, if this is a 1, 2, 3, 4 is a triangle, and a 5 down here, guess what? That's only wave A. We'll have 3 up for wave B, and we'll have 5 down for wave C. And this is that thing I told you, which will probably get us minimum down to 16,000, potentially lower, depending on how wave B plays out there. But that's only if that triangle plays out. Now, you might go and go, oh man, I'm done with this, time to get out. But here's the thing. You can make money shorting, even in the U.S. here. Open up an account with Kraken. You can get up to 5 times leverage on Bitcoin. But you can short it. And so you can make money on this way down. And then you'll have a lot more Bitcoin or a lot more cash to buy Bitcoin at the bottom of the move down and to ride that back up if that were to happen. So it's not that, oh my gosh, it's going down and that's the end of it. You just play it the way it is. If you want to be a trader, being a trader means you play the market in both directions, guys. You can ride it up, you can ride it down. Now, is there possible maybe this is an A, B, and then this is, I don't know, maybe 1, 2, 3, 4, 5? Maybe. I'm not overly, sold by that. I think if we get this breakdown here, most likely it's going to be 1, 2, 3, 4 is a triangle, and 5 is an A. But in either case, price is going to come down to this target here, and then it's going to go up. Now, if that's A, B, and then C down here, well, then it'll just keep going up. If it's 1, 2, 3, 4, 5 is an A, it's only going to go up part way, and then it's going to come back down. But in either case, it would come down, and then it would go up. So in either case, you don't have to know for sure whether this is an A, B, and C down here, or this is just A right here. Because in either case, you're going to go down, and then you're going to go back up. And the targets are going to be the same on the way down, and then you'll have your wave B target on the way up. And if it continues up through that, starts increasing the possibility that this is an ABC done and we're headed up. Yeah. So, yeah, I mean, if I'm looking at that, you can't ignore this consolidation here. And this is what I keep telling you guys. When price is moving sideways, you don't have to trade it. You can wait for a breakout above resistance or a breakdown below support. If you're trying to go long in here, it's possible that you're going to get caught because price isn't going to get above your previous swing high. And it'll come back against you. And so, that's why the trading sideways is difficult for a lot of people, because they get in before they're confirmed that price is moving in one direction or the other. You want to see price get above, this 42,000 and change area here. You get above that, okay, then we're good to go up. But as long as we don't get above that, well, we could go further, and it does. It doesn't quite get there, and it falls back. Now you need to get above minimum this area right here to start feeling a little bit better. Remember, getting above this swing high right here at 40,893 and 60 cents will invalidate the triangle. And what that'll mean then is you just have consolidation going on here, and you're going to have a strong thrust up for wave 3 because you have a 1, 2, 1, 2. And you're going to have a nice, strong, big move of wave 3 up. If we can get a breakout above 40,893 and 60 cents. That's your line in the sand right now. But what I believe we'll have is a 1, 2, 1, 2. We've got this consolidation going here before you have that strong, thrust up, that strong push up higher. XBT is the old ticker that Kraken used to use. They've changed it all to BTC now. XBT chart is still listed there in TradingView. But yeah, Kraken a month ago or 2 months ago or something like that changed it all to BTC now. So yeah. Yeah, somebody tell them it no longer exists, right? Hank says that 24,450 is MicroStrategy's average purchase price. Man, that thing dropping below that for them, that could get interesting, right? I know Saylor says he's not going to sell and he's in it for the long run, but I mean, we're basically 12 above his average entry price, which means he's at an average loss, getting below that 24,000 area there. It makes people do, money makes people do funny things. I would never trust anybody that says, oh, I'm never going to sell, or oh, I'm in this for the long run, or whatever. Even if they've been in it until now, when you get a drop from 65,000, if you bought in and spent all this money buying in, and you're down from 65,000 to 24,000, man, it's hard not to sell and, just, take a minimal loss or whatever, or hopefully take no loss. He's a human being just like the rest of y'all. Now, he's been so vocal about everything that he might just go down with the ship if something like that were to happen, if it was just to continue down lower. But I don't think so. I think he would sell and just say, well, whatever, we're buying back lower or something. He'd find some way to talk around it. But it's a hard thing, especially if you're using public money, if you're a publicly traded company, in the value of your company, you're going to lose value in your company if people see you losing money because you did this whole Bitcoin thing. And, that means, the lower share prices means it's more difficult to move around, to function. You can't get loans the way you need them. You can't finance debt the way you need it. So, there's a lot more to it than being just an individual, buying or selling Bitcoin. So we'll see. Doesn't he face lawsuits if he takes too much loss? It's a hard thing. If you're the head of a company, you've got this fiduciary responsibility. But it's a very difficult thing to prove in court. It's a very difficult thing. But I think if he were to take a loss on Bitcoin from that and not have realized some gains, made some sells along the way or whatever, I think it's possible you could have some guys jump together and try to maybe do a class action or something maybe against him. But man, class actions are tough too. But there would probably be an attempt, maybe. But would he lose? I don't know. If the judge was if he had a personal opinion of Bitcoin that wasn't too nice, too kind, the lawsuit would go in favor of those against Saylor. But it is what it is. Judges are human too, and while they're not supposed to let their personal ideas and beliefs and whatever come in there, they often do. So, yeah. But we'll see. We'll see what happens, right? How would I recommend trading an upthrust here? Well, I mean, again, at the end of the day, I see this as only really two possibilities at the moment, as a 1-2, 1-2, or as a triangle. And so if we were to get above this wave C here, wave B here. Wave C. Yeah, wave C. If we were to get above that, I mean, to me, that says, okay, we're going up. You buy and you ride. Now, this could always morph into some more complex correction of some sort. But, again, you don't ever know for sure what's going on with price. So you kind of play the odds, right? And so, the idea of a much more complex correction is the exception, not the rule, right? And so if you get that breakout, you kind of play with that. That's what's going on. And, you make sure that you're getting this kind of impulsive upthrust breakout above the daily pivot there, and you close above it, and you get some follow through. Because I don't think there's going to be much of a pullback. What we might see is if it breaks above this wave C here, what we might see is an impulsive thrust up through the pivot, maybe a pull back to the pivot, and then continuation up higher. So maybe like through the pivot to this swing high here at 45,823, this exterior wave 4. We might see like a push up there, a pull back to the pivot, and then a continuation up maybe. That's what we might see. But I'll tell you what, we've got this constant decline in volume here, which is what you see with the triangle usually. So the triangle's looking more and more possible right now. As far as the thrust down, let me see here. Again, you're looking for an initial breakdown through the wave C here. or wave D, I'm sorry, of this right here. So, if you drip down below that, the odds are you're going lower at least. Whether this would be an A and a B and a C of D or something, you're probably going lower anyway, at least. But definitely, the place to play the breakdown would be this wave B swing low here at 31,078, because once you're below that, that validates the triangle. That validates the triangle. And so then you should be looking for that further move down. Yeah. So, let me see here. But yeah, I mean that's what you'd probably do. I don't think you're gonna. I can't say you're not going to, but I don't think if it breaks out above C here, above this descending triangle resistance, which really is wave C, is where you want to get above. I don't see that you come back and test it and then go. I think you're a breakout above the daily, maybe hitting this wave 4 right here, and then pulling back to the daily, and that's your retest maybe, and then heading up, I think. So yeah, I think that's what I'd be looking at there. So, we'll see what goes on here. Again, guys, a lot of times you get impatient. But remember, trading, some days, there's a lot of days that just aren't worth trading, guys, depending on what you're trading. And as traders, you need to become comfortable with being patient. You absolutely have to be comfortable with becoming patient, because it's that impatience that's going to lead you to more losses than anything else. This desire to get wealthy as quick as possible, or just the inability to sit on your hands for a bit and let price tell you what's going to happen. And, even with good risk management, if you don't have patience, you're going to lose money that you don't have to lose, which means it's going to take you longer to get where you got to get to, where you want to get to, because you have to wait for that to make up that money, right? So, one of the biggest things, one of the biggest traits that you can have as a trader is patience, guys. Literally, it is, and it's one of the most difficult things to do too. It really is. Again, people get in the market. Retail in general tends to FOMO in at the top. I mean, guys, we've been talking about possibilities in either direction, since we were getting up into here, right? We've always been talking about, but I mean really strongly since we were getting up here, right? And I made mention of things like laser eyes and diamond hands and all these silly things that were permeating throughout the social media, right? And I told you how these were toppish things, right? These were toppish signals. They didn't mean it was signaling that the top was in right there, but that it may be closer than not, right? Because this is the way that people generally act. And contrary to what people may want you to believe, what you see here in the markets is nothing more than people. It's nothing more than this movement between fear and greed. Okay? So it is, what it is there. Now, if we can get this move up through here, if this isn't a triangle, it's a 1-2, 1-2, and we can pop up. Again, I'm still looking at potentially this being a lot larger distribution area here. It really kind of depends on how high we get here. I think if we get toward that 95, 100,000 area, then for wave 5, okay. If we pop it up here to 180 or 190, which is possible with, with the buying at the end there and a big rush to go in, maybe we get like a shorter term distribution here. This becomes reaccumulation. We get a shorter term distribution, and then we'll get a redistribution area right around here as it continues down. But, Wyckoff isn't for projections. I'm doing that right now, but that isn't really what it's for. Wyckoff is to understand what's going on in the trading range there. So if this is a larger accumulation or reaccumulation area here, then you have your distribution here, which leads to your reaccumulation here, which then, takes you up, which is just part of this bigger range here. So we'll see how that plays out there, but we'll have to see there. Best resource to learn Wyckoff, if you're like me, books. I learned Wyckoff by reading the original books he's got. They're very inexpensive at Amazon right now. I think they're like $8 or $10 a piece. They're shorter books and whatnot, but I think it's important to learn from the person who created the system, to read his own writings. When you do something, and then you can add in other areas to look at it. But Wyckoff is not something that you're going to learn overnight. It's we talk about the intricacies between supply and demand here. It's not, Wyckoff is not about supply or, volume or whatever. It's about the interaction between volume and price action. So it's not just about volume. It's how does this volume relate to the price action, and how does that relate to previous areas of price action and volume that are comparable? It's an understanding of what may be going on within a range. So that way, when price breaks out of that range, you have an idea of which way it may be headed. But it's not for projecting. Whereas Elliott Wave is more of a forecasting tool. Elliott Wave gives you projections. So, but they work well together in that, as you can see here, if this is 3 and this is 4 of 3, well, then we've got this possible 3, 4, 5 Elliott Wave, right? Which leads into a potential distribution here. So Elliott Wave and Wyckoff are great to use together. But, you have to know what you're doing with both of them to understand how they may apply together. Neither one of them are you going to learn overnight. And I think that's what turns most people off, new traders. And not just with Wyckoff and Elliott Wave, but with anything they're trying to learn. If they can't be, perfect at it in 30 minutes, then they get bored of it and they go on to the next system or the next thing. And you see this happen in crypto Twitter. We saw this. Hank's been around since, and a few of y'all have been around since, 2017 and whatnot. And you saw it happen in 2017. One week it was Wyckoff. The next week it was ICT. The next week it was Elliott Wave. The next week it was, it was something every week. But retail traders were not really learning these systems, and they weren't, spending time with them. They were just trying to throw it together, pulling something out of the rear end and trying to throw it together. And then when it didn't work, they said, oh, it's a scam. It doesn't work. Move on to the next thing. They do the same thing. Oh, it's a scam. It doesn't work. Move on to the next thing. This is, trading is about figuring out what works for you and then practicing it and doing it for a while, guys. You are not going to learn to be some great trader overnight. It's just not going to happen. But with when you have people like us, what we do at TWC, you can definitely shorten the amount of time it's going to take you to get where you want to get. Because we're there to help you, here are the pitfalls. Here are the things you have to watch out for. All these things that you don't have to learn on your own. And again, even when I tell you that, you're still going to do it. You're still going to, sometimes do things that you don't need to do that we told you not to. Because you just have to learn the hard way, right? So yeah. I learned my Elliott Wave in books. Yeah. So that's where I learned it, and then I went out here and started working with it. But there's with all things, that you learn in a book. There's always this big leap that you have to make to actually doing it in person. And because when we look at Elliott Wave or Wyckoff in books, and other learning venues, it's usually the perfect setup, right? It's where price action looks perfect, right? But most of the times when you're applying it in real life, it doesn't look that way. That's why I started these live streams every week for our Tier 3 members, where they can see us applying, you can see me applying Elliott Wave and talking about as I'm doing it, and what I'm looking at and what I'm concerned about and things to watch out for, as I'm applying it to real charts right then. Same thing we're going to do with Wyckoff. And I'm hoping that bridges that gap between learning it, book learning it, and actually applying it. Because it's always such a large step. It always takes a while because, things don't look as perfect as they do, in the examples that you get in books and other training resources and whatnot. So yeah. So yeah. Yeah, Bruce Fraser and Roman, yeah, they're good. They're over there, Wyckoff and Associates or something like that, I think is what they're called. Yeah. It's a possibility. You're definitely going to pay a lot for that. Their pricing's pretty high, but they've got, a skill set that's in demand and people want to do it. But you're going to pay. You're really going to pay for it. Archetype, you're welcome, man. I think it is, man. I think it's a great thing. Trading is a fantastic thing. Whether you do it exclusively for the rest of your life or whether you just do it on the side because you enjoy whatever it is that you do for a living, whatever you do for work. People sometimes really enjoy what they do for work. And they're just looking at something else to supplement that income so that they can really enjoy what they're doing. They don't have to worry about the fact that they're not getting paid enough to do it. So yeah, I think it's a great one there. Do I use point and figure charts? I do. As a matter of fact, it was a point and figure chart that I posted back here when we were here that gave us this top right here. And I posted that for the free and paid sides of Discord, both of them. But it was my point and figure chart that gave us this target up here, being the top. Again, yeah, definitely use point and figure. Point and figure is it's good if you do it correctly. If you don't, it can give you, like anything else, it can give you some not so great results. But yeah, it's a good thing to use for sure. TV Canal is talking about some CME gap in the 24,000. It makes sense. Again, there's also the S1 daily pivot there. There's this cluster of activity right here at about 21.8 to about 24.2. It's just a little cluster there, but a little bit of a high volume node there. But if you're coming down the S1, you definitely want to see that move back up through it. And if you get that, I think you're at least getting a move up to the pivot. I think if we drop this to the S1, I think you've at least got a long up toward the pivot. Now, if you're breaking out above that pivot, that starts increasing the odds that this is maybe an A, B, and a C down here, and it's up. But that C is just so long, guys. I have a lot of doubt in that being wave C finished. I think it would just be, again, your A down here, and then you get your B up toward this area, toward this wave 4 area, and then you'll have C coming down. Real quick here, if we look at this. Oops. And let's say we get up here. Man, well, according to this, which I guess makes a lot of sense because that's been a big move there. If this is wave A down here at around this 24,000 here. Wait a minute, looks like I didn't pull it far enough. Here we go. Even better, right? If we get 1, 2, 3, 4, 5 to S1, and then we get B and 3 waves up here to around 40 or 41,000, which gets us around wave 4 here, 38 to 40,000, I guess. In that case, wave C will equal wave A at $657. Now tell the truth, how many of y'all are going to be out of the market if that happens? Not come back. Now, why do I say ABC here? Because when you're doing Elliott Wave, usually you're looking for wave C to equal wave A. Now, let me see if we can change something up a little bit here. If we change this to fibs based on log scale, well, then things get a little bit different. Remember when I told you about that 16,000 area? Well, now you have wave C will equal wave A at about 15,580. That's a bit easier to swallow, right? And that's what I think I'd be looking at. Because you don't want to measure, remember, this is a huge move here. And so if you're just using linear fib extensions on a 65,000 to 24,000, so on that type of drop, that 60% drop, it's going to give you that much larger drawdown because it's linear. But the attempt with the fibs based on log is to normalize it to a log scale. And so again, That's more about where we're looking. Potentially the S2 pivot. So I could see it getting down to 12.4. Maybe. 12.4 kind of gets you, look at that as a matter of fact. That gets you right to my yellow box here, this area of support here. So yeah. If you look at this in terms of Wyckoff here, now remember back here when we were over here, I got laughed at so hard about this being Wyckoff, about this being a reaccumulation range being built here, right? And so if you look at it, you get your buying climax. I mean, I think basically you have a short-term distribution and then a redistribution. But this potentially gives you, your buying climax, automatic rally down here, secondary test. It comes down here to this spring here, which moves up, comes back down into a potential type of terminal thrust because of the volume there. Right back into this support right here. And then you get, last point of support, last point of support. This move up, this is a nice clean break up through this area here. So what you have here is what we call creek. And the creek is just basically your resistance. And so you break out above that, it's called the jump across the creek. And so that leads to a show of strength, a pullback, a show of strength. And then if we were to drop down from here and come down toward this area, this just becomes a backup to the edge of the creek, the BAC. And then you look for your move up. And that just confirms kind of this reaccumulation area is what that does. But if you look shorter time frames, you can see, potential, like I said, distribution up here coming down into that. Because it's like Elliott Wave, where you have waves inside of waves inside of waves. It's the same idea with Wyckoff. You have, trading ranges within larger trading ranges within larger trading ranges. And so you get these small trading ranges, which create your tops and your reversal points in your larger trading ranges or your bottoms down here. So if we zoom out to the bigger picture here, this to me doesn't concern me. Drop down into this area, move back up. This to me, right now, barring something crazy happening, to me right now, I would welcome a move down into this area, down into this 12 to 16 area. That would be a massive, massive buying opportunity. But barring, again, like I said, barring something happening on the way down here that says it no longer is. But right now, I mean, this just looks like, reaccumulation going on here, and then, potentially just this back up the edge of the creek here coming out, and then a push higher there. Let's see here. YouTube TV Canal is saying the 200-week MA is near the 12 to 13,000. Huge support. Yeah, so that would make sense. And it aligns with everything else. There's a confluence. Remember, in trading, you're looking for confluences. You're looking for where do you have these targets looking at these different ways? Where do they come together? So yeah, for sure. Crypto Raid says, if the triangle plays out, any chance it's C of an oddly shaped expanded flat? Oops. Sorry, let me get rid of that. Of an oddly shaped, let me change this to a different, cleaner chart here, something easier to see. Let me see what you're looking at here. All right. Is there any chance that this is wave C? No, not wave C, no. A triangle is going to be either waves 4, B, X, Y, or Z. And it's rarely a Y or a Z. Rarely a Y or a Z. Is it possible that maybe we could have like a W, X, Y, X, Z? No, because you would have to have an ABC down there. This would be the ABC. Oh, so maybe like a ABC as a W, and then X as a triangle, and then an ABC down for a Y. So here, look at this, guys. If we get this breakdown here, if this triangle plays out like this and we get the breakdown below here, and it comes down in 3 waves down toward that S1 daily pivot or so, that 24,000, 25,000 level. If it does that in 3 waves and then reverses and heads back up above the second wave, then this is, a W, or I'm sorry, ABC is a W, X is a triangle, and then an ABC down is a Y. So it would be a WXY. That would be something that would probably come out. That would be the only way I would see us coming down here lower and it being the bottom, rather than just being A and then B up and then C down. Okay? So yeah. Let me see here. Jay says, if we move to 14K, all the bull market gains would be erased. It would be a nasty bear market. No, well, I mean, yeah, if you want to look at it, everybody gets on CNBC because they say, okay, Bitcoin's in a bear market after Bitcoin drops 20%. Well, they're being, if you look at the definition of what a bear market is and a bull market is, 20% decline, 20% rise, right? So, I mean, technically they're correct. It is technically a bear market, a 20% decline. Yeah, it would be a pretty nasty move down. Sure. But remember, guys, this is something I've been talking about. If you haven't been around, I guess maybe you haven't been around, but for the last few years, we've been talking about the fact that this move up would be the institutional phase, right? And so think about it. Institutions have time and they have money. They have patience, guys, okay? So buying down here, profiting up here, sending it back down and reloading again, send it back up in this larger picture that I was talking about, as a reaccumulation, back of the edge of creek and head up. It's a play, it's right out of their playbook. It's a strategy right out of their playbook, right? So, again, it doesn't surprise a lot. I mean, it would be right in line with what we would expect on that largest scale. Looking at that, sure. Let me see here. But yeah. So technically they're right when they say bear market because it's 20% drop, but again, you're going to have a lot of this type of action. Bull and bear markets, bull market being 20% rise, in such an asset in which there's such strong movement, there's such strong volatility. You're going to get that a lot. It is what it is. Yeah, sure. MK46 says, I just can't see 20K. We've never touched a previous all-time, but I don't know. Yeah, it may or may not happen. I'm not saying it's going to happen. I'm giving you guys the rationale behind it, how it would likely play out, and why that would be. Yeah. Right now, all I'm looking at, I'll be honest with you guys, right now, all I'm looking at, for me, is do we break out above, for me, it's this point up here. This is that wave B. Do we break out above 42.5, 59.80? Or do we break down here below this swing low right here at 31.078 and 70 cents? That's really my two lines. Those are my lines in the sand right now. And if we break down below this low, well, then I'm looking again as this is a triangle and heading down to that daily S1 pivot around 25,000. From there, does that happen in 3 waves? If it does, then again, it's a WXY. And we're done and we're up. If it comes down in 5 waves off the ending of the triangle here, to me, right now, it suggests that we've got 5 down for an A. We'll have 3 up for a B, which will likely target the pivot area, the daily pivot area, and then we'll have 5 more down for C, which is going to take us that 15,000, 16,000 area probably. Potentially 12,000, go a little bit further. But that's how it is. I'm not going to tell you right now that's going to do either thing. I don't know. Nobody out here knows, guys. Please understand that. Nobody knows. And anybody that's telling you, I keep warning you guys, anybody that's telling you that they know exactly what's going to happen, they're going to guarantee it. Guys, listen, if they get it right, it was luck. It really is. And I know that's hard to understand. But there's no way of knowing for sure what price action is going to do. I'm telling you, you have to do this for 25 years. 26 years, whatever it's been now. So you learn to understand how price moves, and that way you understand what your possibilities are. right? And once you understand what your possibilities are, well, it makes it a lot easier to have more confidence. And then you just need good risk management. As long as you do that, you're fine. You're good to go. But you have to get comfortable with losing money, and you have to get comfortable with patience, with being patient. Because you are going to lose money, guys. No matter how good you are, you will never get 100%. And on those streaks where it seems like you can't get anything wrong, those will come to an abrupt end, and all of a sudden you'll be on the streaks where you can't seem to get anything right. It's risk management that saves you day in and day out. All right? All right, you know what? I'm going to get rid of this idiot. Sorry, guys. Big Beef's just... I'm in there trying to start a lot of stuff with the chat. So... I think I got him blocked. Let's see here. But yeah. So there's a lot to do here, guys. But, in the idea of it making such a large correction, that would tend to go hand in hand with the idea that we've moved on from phases, that we moved on to the institutional phase, which again was what we were talking about in 2018, talking about the next bull run being institutions coming in. And this is what we've had, right? So, yeah, again, this whole idea that maybe we move in from that. So we can get this kind of done here. It makes a lot of sense in terms of everything else. Let me kind of pull this out to the weekly here. Again, this is that big support area. I would expect price to come down to it. I wouldn't expect price to go through it. I think if price goes through it, I think there's potentially a bigger issue, potentially a bigger problem. But it also may just give you one ridiculous entry with it. The one thing that's always bothered me about this area here is that we've got these spikes, continual spikes of volume through it. Again, reaccumulation, you really expect to see a decline in volume. And we don't have that through here. And that still kind of bothers me with the way this looks here. So we'll see how this plays out. There's a lot of different ways this could go. But again, remember, at the end of the day, all things, held equal with crypto, if there's a big reversal with the stock market, remember, this has been everything else aside. Remember, I've said that no matter what anybody else says about anything, if the stock market tumbles, if the stock market has topped out and it falls, and we get into some large recession, depression type thing coming in, there's no reason Bitcoin should continue higher. Because Bitcoin is a risky asset. And those do not bode well. Those don't do well when you have, recessions or depressions. Everything goes down at first. Now, I think Bitcoin would be one of the first ones out of it. I think there's a possibility for that. Maybe even before gold getting out there, sure. But if there was to be a large economic downturn, that takes the stock market down, I still don't see any reason, any way in which Bitcoin would continue to rise. It makes no sense. Everybody's going to be hoarding money, hoarding dollars, because they're going to be worried that they're not going to be able to pay their bills, that they're going to lose their mortgages. Oh, speaking of which, the renting moratorium, the mortgage payment moratorium and whatnot, is set to expire here this month here in the U.S. And something like 15 or 20% of renters are behind on their rent. And so if that moratorium lifts, guess what? That's 15 to 20% that are going to be out on their rear ends. Does that kickstart some kind of movement down? Potentially. Because they're not going to be out there throwing money in the stock market. They're not going to be out there, blowing money willy-nilly. They're going to be putting it aside, sticking it in the bank or under their mattress or whatever. taking it out of circulation. And remember, we talk about when money is removed from circulation, it has a disinflationary at the least, if not deflationary effect. Because those dollars are no longer in there vying for products. They're sitting on the sidelines in the back. Because people want to be able to pay their bills, feed their kids, make their car payment, believe it or not, make their phone payment. These are the important things. Can I explain why the volume upticks bother you? Yeah, because usually in a reaccumulation range, your volume should do this. It should decline. Because in a reaccumulation, the idea is shares or the instrument or whatever are being taken off the market. They're being stuck away. And so as they're taken off the market, that's less and less supply to get in there and cause volatility. So your volume should be dying down as you get through it. If you're in a distribution or redistribution or something, usually there's a lot of spikes of volume because you've got people, because you've got your big players which are distributing at the top, and they're, a little bit on the bottom there, trying to keep the range going. And so, it creates that. I mean, and so then you get this thing where you have all these spikes of volume. Just in a nutshell, that's what you're kind of looking at there. So that bothers me. It does. And so, I kind of looking at the possibility, is this maybe just one big, large range where this becomes an upthrust? This becomes, buying climax, automatic rally, upthrust. And so Bitcoin maybe goes sideways. Now, see, in this case, I can see this coming down toward the bottom here again. I can see that. So you get your volume kind of expanding there, but it's expanding at the bottoms, which is giving you buying at the bottoms. And you have this at the top. But here's the other thing. There's not a significant bit of volume coming up here at the top. Up here. It's a bit of a spike right there. It comes in on this drop, but it's still less than what you have here. And my thought is if this is distribution, there should be a stronger, potentially stronger volume signature up here at the top. Because if it's distribution, remember your big guys are selling into it. And if you're buying as retail, they're willing to sell the heck into you. Now, as far as pivots go here, as far as pivots go, a drop below this weekly pivot after reaching the R3 there is likely, we should likely expect it to head down to the S1. S1's right there around that 12,000 level. So again, if you're looking potentially as a target as as the S1, there you go. But that would be as a reaccumulation here heading up, doing all that. Yeah, I know everybody talks about combined volume. It doesn't make sense. If you look at combined volume, but you're only looking at the price action of some volume, then you're not getting I don't think you're getting a correct read on it. I don't think. You can't use combined volume with, say, the Kraken price action, because you're looking at your price action and volume reading together on that exchange, on that area. If you're getting if you're using total volume, you're bringing in volume that isn't reflected in the price action. You see what I'm saying there? And so I have a lot of difficulty doing that. That to me doesn't make sense. So yeah, I don't know. Again, I'm just a firm believer in the way that that you're trying to analyze the chart. You can't bring in something else from from some other place and bring it in there and then try to use that price action. That doesn't make sense. You're looking at the price action in relation to the volume on that chart. I think if you're using some kind of combined a volume thing, then you have to look at a combined price action in the same way. So however that volume's weighted, you need to weight the price action the same way to come out with a weighted price action to go with that weighted volume, total volume thing. If it's total volume, then you've got to make it work out somehow there. But again, I think if you're using total volume, which is volume from all these different exchanges, with the price action of a single exchange, it doesn't make sense to me. Yeah, I don't know. Yeah, Todd, he does that. Yeah, I think I remember him before mentioning he's got some kind of total volume thing. It doesn't make sense to me in the way that you're reading Wyckoff. It doesn't make sense because it's not a true representation of the volume and the price action then. So I won't do that. I won't do it. The volume, the price action I want to be related to that volume. I think any other way you're just kind of assuming and hoping that you can get some kind of relevant reading out of it. But I don't know that makes a whole lot of sense. Doesn't to me anyway. So yeah. Am I looking for interns? Potentially. Send me a resume. Christopher.inks@texaswestcapital.com. We might be looking for interns, maybe. Yeah. How come volume on the 2017 high was so low? Well, it wasn't so low. Look at the volume previous. Now, remember, this is Kraken. So, the chart only goes back to this area here. Relative to the volume prior, it was pretty high. But you have bigger involvement, more money involved here. So you're going to have higher volume. Yeah. Remember, guys, volume is always relative. It's always relative. Or maybe you meant this right here, maybe. Maybe that's what you meant. Because what happens is you will get your greatest hit of volume on your preliminary supply or on your buying climax. In this case, this becomes your preliminary supply right here, I believe. That's this point right here. And that's where all your volume's kicking in, is this area right here. And then it goes to your buying climax, which has lower volume. And of course, you get you down and you find your price finds support right around that preliminary supply, which is what you're usually looking for. Usually when you drop back here, your AR usually finds support at the PS here. Or the PSY. Right here. So yeah. But yeah. Is there something that charts volume and liquidity as a factored statistic? I don't know. I can't think of anything right off the top of my head. Anything that does that. Yeah. But yeah, Leighton, that's probably why there. Again, you'll get your spike of volume either at your preliminary supply or at your buying climax. One of those two areas. And so in this case, it would be right here at your preliminary supply. And then price rode up. And then, of course, like I said, you came down with the move here. They get you right down to that area, which I think makes it an interesting idea, with this potentially being some large distribution range or reaccumulation range anyway, which would explain why the volume looks like it does here, because during phase A and B, your volume is going to be looking like distribution, because this is the area where you're fighting between supply and demand. And it's after phase B that your volume starts dying down. So, do we get this move back down and maybe a dip below here as your spring? So is this, A is your stopping phase, B is right here where you're going down there where you're trying to move between that the supply and demand where they're trying to fight it out. And then wave C becomes, that last dip down. Probably below that is a spring. Wave E becomes your interior markup, and wave D becomes your interior markup, and wave E becomes your exterior markup. Now here's the thing. If this is what's happening here, then this right here, the longer this plays out, so this is already playing out this long here, the further price is going to rise. And this is the basis for the point and figure calculation here. The longer you go sideways, the further you're going to go when it breaks out. So maybe this becomes some huge reaccumulation range in here. And during this point and coming back down here, you know, all these points here, you know, institutions are really buying down here, buying a bit here, sell and send it back down, buy some more down here. So now they've accumulated all in this area here. And then it goes up. And guess what? All of retail's given up. They give up. It's a scam. It's useless. It's going to zero. It's never going to be anything big. It lost, you know, I lost all my money in it. They stole my money from me. And then new guys will come in and kind of ride it up. But guess who's riding it from down here? They get this average entry from 3,100 or maybe even a little bit below here, 2,100 maybe, up to, you know, 6,700. And they ride that up to 500,000 or 600,000. I don't know. But I think right now, you know, we play it bit by bit at the moment here. We watch our levels. Does it break out? You know, if this thing breaks out and goes up here, okay, everything's off. This is, you know, it's what it is. It's done. It's headed up. But if we get this breakdown, things start getting interesting. We can look at these other narratives. I know that if it drops on down here toward this area, right now my plan would be to buy the heck out of it. Because I would then expect this thing to just head on up, you know, 6 figures beyond. Maybe even 7 figures. My only thing that would change that is if something happens on the way down here, which it doesn't look like it's going to be some kind of environment, healthy environment for crypto from then on. I don't know, some kind of large government regulation making it almost impossible to transact or something. But right now, to me, that would be an amazing place to buy. Absolutely amazing. So yeah. Mike, what's up, man? Mike of the Galaxy. I like that name, man. He says that macro theory makes the most sense if institutions are slowly getting in. They haven't accumulated all they want at prices they want. Yeah. Yeah. And so even with institutions, you're going to have a few that come out at first, right? You're going to have some that come out at first, kind of testing the waters, getting in ahead of the big ones, right? The real big ones. And then once that's done and sends it back, then, you know, they're coming in here, sending it back down, and all the institutions then go, oh my gosh, time to get involved. And they're all buying then down there. So you have your first run of institutional investors buying in down here. Coming right here. And then you have your big group of your institutional investors. Remember what I've told you guys, you know, you hear all these stories about, oh, this person and that person, this institution, that institution entering. But remember, I've kept telling you guys, it's only a few guys out of how many there are out there, right? So maybe it becomes a huge thing down here, possibly. That would make a lot of sense, sure. Let's see here. In case this scenario plays out, would it be correlated with the next halving? When's the next halving? Was that 20? Was it 23? I think, yeah, I think it might. Yeah. I think that would probably correlate with that pretty well. You see it move down there. I'm going to tell you right now, guys, honestly, I know you don't want to hear this because you want to be rich tomorrow, right? But honestly, the best scenario we could have would be for this to come back down here to this level. It was the same thing I was talking about when we were coming up here, and I was talking about the best scenario would be to come on down here because it opens up that move up. Well, at this point now, we've now had all this extra, and even more so, if it were to come back down here, I think it makes just an insane case to really turn your life into something huge, wealth-wise. Now, is it going to do it? I don't know, guys. You know, again, I've talked about the possibilities coming down here, things we have to watch, and where it may lead for the next move, right? But if we're getting down here around 12,000, things start really getting interesting now. Things really start getting interesting then. Let me see something here. I'm not sure if we can get 5 out of this here. I don't know, maybe we go 1, 2, 3, 4. 1, 2, 3, 4, 1, 2, 3, 4, 5. I mean, maybe. But what's interesting about this is that gives us just 3 moves up. This gets kind of interesting then. See, the thing is, even using the... let's do the fibs based on log. All right. Now, I've been talking a while about the idea that maybe we've got 3 down, 3 up, and then 5 down. If we use fibs based on log scale, we've got a 1618 just about where we topped out. A, B, C, 5 down. There's 2 ways that could play out. You know, we would be looking at a flat correction here. 2 ways this plays out. One is it gets to around probably this... you know what? Okay, so 24 gets us just a little bit above this top here, right? Let me see here. See, and if we look at this, 24 there. It doesn't have to dip down here into oversold. We could have a last point of support here heading up. This becomes a running flat. So ABC down, ABC up, 5 down toward 5 or 6,000. Kind of like this area right here. We do it in 5 waves down there potentially. And then we head up. And so in terms of Wyckoff, this whole thing becomes a reaccumulation. We have our last point of support here instead of a spring, right there around 5,000, 6,000. It heads up. In terms of Elliott Wave, this becomes just an expanded, or a running flat. A, B is a triangle, C down, A, B, C up, which gives us 5 down, which keeps us around this high volume node here. And then we start the next series of waves up for wave 5 or whatever. And this length of time here in terms of point and figure and Wyckoff gives us an extended target up there. And in that case, I think we'd probably see 300,000, 500,000. Because of the length of time, this is sideways here. We're not going below 50,000 ever again. But hey, guys, you know, so keep this in mind. I think that really opens up some interesting ideas here. Now, whether it gets to 6,000 or whether it just gets to 12,000, you know, one of those areas being that last point of support before it heads up. I think if we see targets heading down there, guys, you know, keep following with me here and we'll look at it. But I think it may give us some interesting movements for that, you know. Do I become vindicated then for what I was talking about this happening? It just took a little longer to go. Maybe. I don't care. Because the people who gave me a hard time about it, the people that are losing money anyway, they don't have any clue what they're talking about. They couldn't see it. They couldn't understand it. So it really doesn't bother me if it ever, you know, did anything different. I think it's also possible maybe we get a 1, 2, 3, 4 as a triangle here, as I've talked about previously, and a 5 up here. So this gives us a 1, 2, 3, 4, and then 1, 2, 3, 4, 5. Now that gives us then wave done there. So we have our A and our B and our C up here. And I know this probably turns a lot of y'all off, and you're going to go over here and you're going to make fun of me. Whatever, do what you need to do. But let's understand something right here, guys. I've been doing this for, what, a quarter of a century now? You don't get to do this for that long by constantly making, erroneous looks at the chart. Constantly, all the time. You've got to be profitable. So I must know what I'm doing to some extent. Just because maybe you're a new trader and you don't want it to do that, or you don't understand how it can do that, doesn't mean that it can't happen. So we've got a couple of different possibility of things to play out here. We just watched the levels that I talked about. And we short it down or we long it up, depending if it goes through those levels. But I think there's a heck of an argument to be made. I think there's a heck of an argument to be made for this potentially just being one large reaccumulation range here. And like I said, maybe instead of a spring, we could still get a spring, but instead of a spring, maybe we just get a last point of support at either 6 or 12,000 area. And that would be a huge buy-in, guys. Think about it. If you just came in with price between 40 and 60,000, and then you get a chance to buy in at 12, or heck, heaven forbid, maybe even 6. Can you imagine that? That's amazing. Duff Trades, I appreciate you, man. Yeah, it turned off. I say a lot of things, guys, because here's the thing. I'm not trying to sell you anything. Other than joining us. We'd love to have you there. But just because I really believe that, we're one of the best places that you can learn how to trade properly. But I'm not trying to sell you, what's going on in the chart. I'm trying to show you that there's other possibilities here that other people may not be considering, that may be out there doing something that may be much bigger. People are very hyper-focused in. It may be something bigger out there. And so in this case, we might see this volume I was talking about. We might see this decline in volume happening like this as we come on down through here. And then we'll see the volume kick up again once it starts heading back up. But I'm not here to kind of make you guys feel good and to make you feel like you're all doing fantastic no matter where you bought in, whatever. I'm here to tell you what the charts are looking at and the possibilities that they may be putting out there. Now, I'm going to have to take a look at some other charts, guys. This is just cracking, okay? So don't immediately assume this is what's happening when I'm talking about some big, reaccumulation range thing going in here. But let me take a look at those other charts and see how they kind of compare volume and price action wise. And these different exchanges, and kind of see if maybe there's some kind of something going on that we can see through all the exchanges, maybe. Storm Detector says we've bounced 4 or 5 times off 30 to 35. Too much buying pressure to go that low? No. Not really, man. And this is why I started TWC, because of thinking like that. The only reason we're bouncing right here is because we have this little bit right here. But if you lose that, guess what? You have nothing here until you get down here to 12. You have nothing here. You have outlier, all-time high, not a big deal. You have this interior high, not overly a big deal, because this is your most recent movement here. But if you lose this low here, and if you keep bouncing there, you're saying, oh, there's too much buying pressure. Well, no, there's not enough buying pressure because price keeps coming back to it. It can't get price going up. It gets an initial buy and there's no follow through higher. So often what that signals is that you've got selling going on in that area. You've got consistent selling coming in on it. So buyers can't grab a foothold. They can't continue higher. Yeah. That's what I'm kind of looking at. A huge number of institutional investors just bought at 35K. Man, I'd love to have your information, man. I'd love to see a list of names and where they bought and how much they bought. Day traders are selling for profit is why. I mean, you've got a lot of reasons, man, but I'm going to tell you, when you zoom out, these are the things we look at. And I'm going to tell you, I'm concerned because the structure of what's going on here, this structure right here, man. The structure it makes a good case for a triangle here. But if you get a breakdown below that level that's holding this up, you're going to see a lot of selling, no buying, a lot of selling. It's going to send it falling on down. Yeah. Because, who's going to buy? It's, they were buying here, they were buying here. But notice, you're getting higher lows, but you're also getting lower highs. Volume's dropping off, consolidating. I mean, it makes a good case for a triangle. But again, I've got this label here as potentially a 1-2, 1-2, so we'll see. But we've got to get up above these swing highs. If you ain't doing that, you're starting to drop below these swing lows. That's all she wrote. I'm looking at least right here around 25,000 to begin with. And in terms of pivots, if you're at the S3, usually you follow down through to the S5. Usually, not all the time, but usually. So there's other things we have to keep in mind too. Sure. Hey, I appreciate you, man. No, definitely. I'm not, trying to be rude or anything. So yeah. I'm just giving you, again, I've been doing this a very long time. And, there's things that cause concern. My count still right now, until we're losing this swing low right here, my count is a 1-2, 1-2. And like I said earlier in the show here, this could just be consolidation before a thrust up, a large wave 3. But for right now, until that happens, price action is suggesting a possible triangle. And we need to be wary of that. Otherwise, people are going to go long here, and they get caught, and it's going to drop below that swing low. And they're just going to end up either getting liquidated or selling at a loss. Yeah. So we'll see what happens. I'm not telling you it's definitely going to happen. I'm telling you these are the possibilities and why they may work out and how they may work out. But right now, we need to see if price is going to go up. We need to see it get above wave C here. If it gets above this wave C, guys, remember 40,893 and 60 cents on Kraken. If we get above that, the triangle is invalidated. And my bias is definitely to the upside at that point. But we still have to get across things, again, the swing high right here, interior wave 4, exterior wave 4, wave B, and then all-time high. Those are your targets on the way up. And the more of those you take out, the more the more confidence you have in the bottom being here, and we're headed up in wave 5 or 5 of 3. Yeah. So yeah. But again, if we're losing wave C here, that should put you on notice that there may be a breakdown coming. And in order for this, if this triangle's here, dropping below wave B of the triangle at 31,078 would confirm the triangle. And we should be looking then down here at 25,000. This area down here. Now what happens after that, we'll have to wait and see. Again, do we get 3 waves down? If this breaks down, does it do it in 3 waves here, which just says, okay, that's a W, this is an X, and then we have a Y? Does it come down in 5 waves, which then says this is A, we'll have B up to the daily pivot or so, maybe this area right here, 38 to 40,000, and then we'll have 5 more down towards 16,000, maybe 12,000 for wave C? We'll have to play it as it does it. There's no way to know right here which way it's going to go. But there should be concern that price is not rising, that it's continuing to print lower highs. Because in terms of what's going on with the market there, we're in this large downtrend. Price is not making higher highs, which tells us that demand may be fatigued. There might not be enough demand in there to push it up higher, which means you need to break it on down lower to get your lower buyers to help get that price move back up through that supply that's coming in. But if you can't make higher highs, you have to be very wary about what's potentially going on. Because there's going to be that, because these lower highs tell you that there is significant enough supply pressure coming in relative to demand. Doesn't mean it has to be a huge bit of supply. It just has to be a significant amount of supply relative to the demand that's coming in that area. Yeah, and so if this is a triangle here, it's going to mean there's one more down. There's, you know, triangles aren't ending movements there unless they're, like I said, like a wave Z, something like that. But triangles usually indicate one more move in that direction that the price has been. So yeah. So just some thoughts on that, guys. I don't, you know, again, guys, I'm not here to tell you what it's definitely going to do because I don't know and nobody else knows. Contrary to what they want you to believe. Why? Because if they tell you what you want to hear, then you'll likely buy something from them. Do we want you to be members of TWC? Sure. We've got an amazing community of people, and I bend over backwards trying to teach y'all how to trade. But, you know, whether you do or don't, that's up to you. I'm not going to change. I'm not going to set this up to some happy-go-lucky all the time kind of chart just to appease you so that you think, oh, you need to join. I want you guys to join because you really want to learn how to trade. You really want to understand what's going on here. You're tired of the nonsense that most people use as reasons why prices move in one way or the other. So that way you guys can trade on your own. You don't have to listen, you know, you don't have to trade based on what I say or what anybody else says. That's the important thing. If you can get to that point, man, you've got a great future ahead of you. But I'm going to be honest with you guys. It takes a lot more than most of y'all are going to be willing to put out there in terms of effort and time. Everybody wants a 5-minute or a 2-minute, soundbite. Nobody wants to actually learn. Everybody just wants to be told, contrary to what they say. But we work hard on teaching you guys so that you learn. Because heaven forbid, what happens to me, man? What happens if I'm gone tomorrow? Again, you know, my brother-in-law passed away Friday. He was in great shape, great health. A little bit younger than me. So if I'm gone tomorrow, you know, it doesn't do any good that you've never actually learned how to trade. That you've just been, you know, trading based off of what I'm saying on the chart there. You know, this level, that level. But if I do end up passing away at some point, you've got a skill that you can use for the rest of your life. And if you've got kids, you can teach them. You're not going to beat the system, guys. Not in life, not anything else. But you can learn how the system is played, and you can profit from it, and you can do what you need to do to make sure that you and yours are taken care of. That's the goal. That's real talk right there, guys. All right? Everyone wants to go to heaven, but nobody wants to die. That's right, Mike. Exactly. Do I think we're in a mini Wyckoff pattern? It depends on what you're talking about, mini. It depends on what time frame you're talking about. I mean, you know, it happens all the time, guys. This right here is a range. This right here is something going on here, right? And so if we look at this, let's say this area right here, if we look at this as the range, say something like that, or I guess it'd probably be, I don't know, probably something like that. Got to change this color here real quick. And so, yeah, you know, we're within a range here, and the volume, you know, remember what I talked about volume and reaccumulation? It dies off like this. Suggests potential reaccumulation. But the other part of that is you need higher highs. Right now we don't have that. We have lower highs. We have higher lows. And so that just gives us the consolidation that goes on here. So again, looking at Elliott Wave suggests that this may be a triangle. And if so, again, we look for the breakdowns of those levels we talked about, to, you know, this one over here especially, to confirm it. And we should expect to see volume pick up as it drops off, as price drops. But again, my count right here, my black count is my main count right now until we lose this swing low right here at 33,400. If we lose this swing low, then I start looking much more seriously at the possibility of a triangle. Until then, I've got a 1, 2, 1, 2, which suggests a move before a strong breakout upward. So again, that would add support for the idea that this is potentially reaccumulation going on here. So it all comes down to the levels. Which way are we going with them? Are we breaking out above the ones up top, or are we breaking down below the ones below? Yeah. Wishful thinking, Mom. Thank you. I appreciate you. Thoughts on trade to coin? Greenie, man, I wish I could help you out. I honestly have never heard of that. So I really don't have an opinion on it because I don't know what it is. Sorry about that, bud. What do I think of Ethereum printing a lower 523 low in comparison to the potential triangle? I don't really think much about it. If we look at it, let me see here. I haven't even looked at Ethereum, guys, since last Thursday or whatever, so we're about to see how interesting this chart looks. Okay, so I guess potentially that'd be flat there. Now, see, I kind of like what's going on here. But again, we're only up in 3 waves right here, right now. We need to get another higher high. And if we can do it above the swing high over here at 29.1368, then that'd be great. Right now, we're only 3 waves up, though, which suggests that this might be corrective. 1, 2, 3, 4, 5, maybe. Sorry, 1, 2, 3, 4. 1, 2, 3, 4, 5. I mean, I can get 5 down, 3 up. We need to see that move up. We need to see another wave up. It hit the 78.6. I mean, that's a solid wave too. So what you're going to want to see is do we get this breakout above? Do we get a 5th wave up? If we can get a 5th wave up here, then, the 5 down, it's ABC down, ABC up, and then 1, 2, 3, 4, 5 here. It's a flat correction. So 1, 2, 3, 4. We should get a 5 up here around the R1 pivot, up here around this 2850, 2900 level. But if we can't get that, if this drops down below this swing low first, right here at 2285, that confirms this is 3 waves up is corrective. So this looks like 1, 2, 3, 4, and we're coming down lower. So I mean, as far as Ethereum goes, that's what we're looking for. Do we break out above the swing high local here, or do we break down below this interior support here, interior swing low? Yeah. Oh, no, you didn't, Luna. Thanks, Hank. I didn't see that. Oh, try again. What? I'll have to see if they show up again. I had to reload my thing there with the chat window there, unfortunately. So, yeah. So, I mean, if we're looking at this, guys, I mean, this is the way it is. Now, I think that if we get this breakout above here, I think Bitcoin comes up with it. I think they move together, basically. So I think there's a good chance that if we're getting 5 waves up here, that Bitcoin, getting above that swing high, that Bitcoin's going to, again, follow this count that I've got going on here, probably. So, watch Ethereum, see if we can do it. I mean, you've got the 1 hour here, you're down and oversold. RSI is almost down to oversold. I mean, I could see it pulling back here, you know, toward this area here, this this right here, you want to see this hold. So 1, 2, 3, 4, 5 up toward that R150. Like I said, 2850, 2900. If we can get 5 up there, I think you pull back toward this area here, and so things continue going on. So maybe you're getting something like this here, right? And then heading up, right? So 1, 2, 3, 4, 5 gives us a 1, 2 pull back toward this area here, and then 3 up, right? Oh, almost perfectly where it was. Yeah, looking up here at that 4,000 level. In terms of the descending resistance here of this channel, and it's always so much fun with this, right? You know, we would be looking for that that breakout above that and heading up. So yeah, I think it's a possibility there. But you know, like I said, if we lose this swing low down here, that says this is corrective and we have further downside coming. Yeah. Let me see. Jonas, you're funny, man. Let me see here. Oh my gosh, who is this? Davis Brown needs to go, man. So these guys are going to stop, or they've moved from my comments to the chat now, huh? Yeah, so it's possible, you know. If we're looking at XRP here real quick. Let's see here. Let me see. Yeah, so I mean, XRP is following what I had laid out last week. Looks like we probably got a 1-2 here. I'm looking at probably a leading diagonal type thing going on, maybe. This would give us a wave 3, an interior wave 3, so 1, 2, gives us a 3 up here about 1.81, gives us a 2 or a 5, I'm sorry, just above that 3 there at around 2.198. So right there around that R2 pivot area. And I know I've got wave 5 up here, but, you know, well, I don't know, that could be, you know, that would be A up and then B back and then C up. So yeah, I was still looking for 5 to head up there toward maybe the $3 area. 280 to $3, 305, somewhere in there maybe. If this count is correct, you know, which basically is A, B, C. So A, B, C is 1, 2, A, B, C is 3, 4, and then we'll have an A, B, C up here is 5. Finishes off a leading diagonal. Maybe. Yeah. Yeah, I've got 4 more minutes to stream here, Lamb. Oh, yeah, Common Man. Nah, Crypto Girl's been with us forever and a day. Yeah. I appreciate her. She, you know, she lets people know how she feels about us. But she's been with us for years. So I definitely appreciate it. Block Tech, I think, has been following for at least as long as well. What happens after leading diagonal? Price pulls back. So you get 5 waves up and you get 3 back and then you have 5 up. Hey, John, you're welcome. Or John Snow, you're welcome. Yeah, and, you know, if we're looking at that, I mean, let me see here. Yeah, see, this kind of takes us up to this previous all-time high area here from 2017. So then we pull back a bit and then we head up potentially. And if we do that, I think breakout through that top. If we're going to follow this and pull back and then head up, just so you guys don't, in case you never come back, I think our target's probably around $6.50, 6.64, 6.65. Just a quick pattern target based off this kind of bowl-looking thing it's got going here. Yeah. I know, crazy, right? XRP at $6 and some change. Crazy. But I told you guys long ago, stop listening to what everybody else says about XRP. Don't worry about that. Who cares? You know, people are going to have their opinions based on nonsense. Most of what you guys are going to read on Twitter, you know, and other social media is just a bunch of nonsense. Don't ever forget that. People are going to guarantee you, they're going to give you, oh, it has an 80% chance of doing this or that. It's all nonsense, guys. Nobody's out there really calculating what kind of odds, you know, price action has to do whatever they think it's going to do. They're just throwing a number out there, which means it's insignificant what they're saying. Please understand that, guys. If you never come back and, you know, watch us again, if you never join us at TWC, hopefully you're getting this kind of stuff out of here at least. Life's too short to go on there thinking the things you do when you first come in and then getting taken. Okay? Because whether people do things nefariously or not, they may believe their own nonsense. But in either case, you're still going to potentially end up losing out. There's no reason to do that. If you're out here following people, just looking for people to tell you where to buy and sell, you're going to lose more money than you'll ever make. Okay? Learn to trade for yourselves, guys. Then you can trade in a way that makes sense for you. The things that make you who you are as a trader or investor. Which are going to be the things that are different than me. Or different than Hank. Or different than anybody else out there. We're all different. We've all got different time frames we can trade or that we want to trade. We've got different current wealth and financial positions. We've got different long, short, and mid, and long-term investing and trading goals. Financial and wealth goals. You know, all these things, guys, we got different levels of risk aversion or risk tolerance. All these things define who we are as traders. And somebody online may tell you, hey, listen, you should buy here, but it may not be the best thing for you. It really may not, based on who you are as a trader investor. It may be way too risky or not risky enough, or the time frame may be too long. You have to learn who you are. Not just in trading, guys, but in life. If you don't know who you are, you're gonna bounce around aimlessly. Again, in the charts and in life. Life's too short to waste on that nonsense. Sit down and figure out who you are. And be okay with that. Be happy with who you are. I think so much unhappiness in this life from people comes from people just not knowing who they are. They don't know who they are. And that's unfortunate. Life's too short, guys. It's fleeting. Life is not fair. It'll be taken from you when you least expect it. It's up to you to take advantage of your life, to do those things that make your life worth living. And not worry about what some other idiot online says or some other Yahoo online. Who cares? You're beautiful people. You really are. It's time you accepted that and you learned that. And you were okay with that. And you go on and you do stuff in your life that makes a difference to you. I promise you, if you can't get that figured out in life, you're not going to get the charts figured out. I promise you that. I said it so many times before. How you view the charts is a direct representation of how you view life. It really is. That's right. The only thing we were taught is how to make money in 9-to-5 jobs. It takes a lot of cojones to step out on your own, guys. There's no perceived net there. No health insurance. No days off. No sick call. No calling in sick. But the upside's unlimited as well. And that's the draw. All right? Cryptogirl, I appreciate you. Bill as well. Bill says, once I really understood who I was, I stopped being a human doing and became a human being. Only took me 50 years. It does, man. Sometimes it just takes forever, right? But it comes when it's gone. It comes when it comes, guys. I hope you guys have a great day. I hope you have a great week. As always, we would love to have you. You can join us at howtotradetowin.com. We've got 3 different tiers there. Tier 3 is going to get you everything, though. But, you can, I just had some new people joining up or whatever, and, they started a smaller, lower tier, tier 2 or something, just to kind of see, is it legit? Are we on the up and up? And then they, most of the time, end up switching up to tier 3 because they want that whole fire hose. They may regret it at first because it is so much content, but they end up getting used to it and take full advantage of all the educational stuff there. So we'd love to have you there, guys. But, even if not, I look forward to hopefully having you guys join us back on Friday, 11 a.m. Central Standard Time. And I'm sorry, we just kind of looked at crypto today. We'll look at everything then. We'll look at gold and dollar and all that fun stuff as well, stock markets, all that. But hopefully I gave you enough to think about as far as Bitcoin goes. Hopefully I gave you enough that you at least go, okay, nobody knows what's going to happen. But we can watch levels, and we can trade those levels as it materializes, as the price action plays out. And that helps build our confidence in what may be going on, to give us the ability to add bigger positions and larger position over and directionals and whatnot. All right? All right. Hey, man. Thank you guys so much. Like I said, I appreciate you guys. Thank you so much for the things you've said. You guys are really kind. But we'll be back on Friday, 11 a.m. Central Standard Time. And like I said, if you want more of a fire hose of education and content or whatever, join us at howtotradetowin.com. We'd love to have you there. Remember, at the end of the day, the only thing you control in the market is how much you lose. That's it, guys. All right? Take care.